100K, 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 every day, we don't play, here to stay, we here to stay, concentrate, anticipate, it's okay,
Hello, my crypto juggernauts and family. Welcome to the Mx3 Crypto Report, your destination for relevant crypto information when you need it the most. My name is Michael, and we have Mike, and we have Mark as our special co-host for today. Thank you for tuning in, and as per usual, please subscribe, give us a like, hit that notification button, and leave a comment. We appreciate your support as we continue to give you more valuable content. Awesome. So in today's news crypto segment, beautiful. On October 19th, 2021, Bitcoin reached a new market high after ProShares began the trading of the Bitcoin Strategy Fund, marking the first Bitcoin ETF to trade in the US. As a provider of specialized exchange traded products based in Bethesda, Maryland, the fund will be traded under the ticker BITO. An ETF is short for an exchange-traded fund. It is an investment fund comprising of a pool of assets traded on a stock exchange. An ETF is not owned by the investor, but the general attraction lies in the notion that it provides protection and liquidity. According to an article at CNBC.com, the ProShares Bitcoin Strategy ETF, ticker BTIO, jumped 4.8% to close at $41.94. The fund tracks CME Bitcoin futures or contracts speculating on the future price of Bitcoin rather than the crypto itself. The article further stated that this means investors in the ETF should expect the price and performance of the shares to differ somewhat from the price of Bitcoin itself. This isn't ideal for existing investors. Many of them take a long view on cryptocurrencies and had hoped for an ETF that would track physical Bitcoin that investors could buy and hold. The crypto industry has been longing for a Bitcoin-related ETF for many years. In about 2017, asset managers began applying to launch spot Bitcoin ETFs, but their proposals were rejected by the Securities and the Exchange Commission, SEC, which maintained none were able to prove market resistance to manipulation. The rush of applications for the futures-based ETFs came this year shortly after Chairman Gary Gensler took the helm of the agency. Some argue the impact of an ETF, particularly one tied to futures contract, is lessened by the adoption of crypto by companies and fintechs. Investors have many ways to get indirect exposure to Bitcoin without actually owning it. Through institutional grade funds, financial apps like PayPal and Square's Cashapp, or crypto-related equities like Coinbase and mining stocks. According to an article on Investopedia.com, perhaps most important, though ETFs are much better understood across the investment world than cryptocurrencies, even as digital coins and tokens become increasingly popular, an investor looking to get involved in a digital currency could focus on trading a vehicle they already understand, instead of having to learn the ins and outs of something seemingly complicated. Hey, Mike, what is your opinion on this piece?
To me, just looking at it from a high level, it seems extremely risky, because speculation on future price for any type of an asset is risky, but especially for something, and in particular, I believe you mentioned this was a specific ETF for Bitcoin, correct?
Yes, sir.
So the history of Bitcoin has been, there have been some bear and bull runs there, and to speculate on future price, I think in a certain window it can be very profitable, but overall, I think to me that just seems extremely risky.
At the end of the day, that is I totally agree, and that is something that we do imagine when we go into things like these. But for some people from the outside looking in, this may seem like a safer route for them because they're already used to the security and the stabilization and kind of the monetization within these securities from the SEC, from the stocks, and having that type of protection within an ETF going into Bitcoin kind of makes them more at ease to jump in because they're not necessarily getting involved with the market itself by minting, by buying their own cryptocurrency, buying their own Bitcoin, and having to worry about trading it and the volatility that comes with the market. But they're rather within that, that safety net of the ETF and the company that manages it with the securities and insurances that are provided with that. So somebody from the outside looking in, audience, please don't quote me on this. And if I'm wrong, please say anything in the comments. I will take my word back. But, at the end of the day, I just think that, it may be good for somebody else looking from the outside in. Let me just end it at that.
Yeah, I agree.
Yeah.
I definitely agree.
Mark, what's your opinion on this? Or if you have any questions either.
Yeah, I was just going to say, I agree with what you say. I think with the SEC backing with the Bitcoin ETF, I think it's more geared toward new investors or people that's not that familiar with cryptocurrency. I think they would feel more at ease with that ETF with the SEC backing. But I think savvy investors in cryptocurrency, the people that's already been there, that know the ins and outs of cryptocurrency, I don't think it matters to them whether the SEC backs it or not, because they already know what's a good investment and what's not a good investment. But I think it's more geared toward the new investor or people that's not that familiar with the ETFs or even cryptocurrency.
Absolutely, and I totally agree with that. Even though I believe that Bitcoin ETFs defeat the purpose of the original narrative of crypto being a decentralized store of value, I do see it as an upside in regard to it attracting more users who might have hesitated once before. All right, guys. So in our next segment, we're going to discuss what a cryptocurrency exchange and wallet is. We will also describe what Coinbase is and how to set up a Coinbase account. All right, lovely. So what are cryptocurrency exchanges? All right. If I had to, I'll probably put a drum roll sound in here if I can in the editing. All right. So what are cryptocurrency exchanges? They are platforms where you can exchange one cryptocurrency from another cryptocurrency or for a fiat currency. Fiat currency is a form of money that is issued by a government and declared to be legal tender. For example, the US dollar, the British pound, and the Chinese yen are all fiat currencies. Essentially, a crypto exchange offers a platform whereby customers looking to buy and sell cryptocurrency assets can exchange digital tokens in value based on the current market prices. All right. Usually on most exchanges, you will observe either local fiat to crypto transactions or crypto to crypto transactions. Okay. There are typically three types of exchanges. All right. We have centralized exchange, also known as the CEX. This is a cryptocurrency platform governed by a company of central organization, which offers cryptocurrency to traders from fiat to cryptocurrency or crypto to crypto. And one's identity is usually known by the company of the centralized exchange, and transactions also may be monitored, within these type of exchanges. Okay. Now, another type of exchange that we have is a decentralized exchange, also known as DEX or DEX. And this type of cryptocurrency platform does not depend on a company or a service to control the assets of a customer. Instead, the trades or transactions are controlled by an automated process without any central presence, which is key. These trades are considered peer-to-peer or customer-to-customer. In a decentralized exchange, one's identity is usually kept anonymous, and these anonymous transactions can only be viewed in the blockchain, which we will discuss more about that in the next segment. And then the last type of exchange that we have is the hybrid type exchange. So these platforms are platforms that incorporate both centralized and decentralized elements in these type of platforms. Okay, what do you guys think? Did I kind of explain that okay?
Hey, Mark.
Yeah, explained it great. Just a quick question: the decentralized, is that the most popular exchange with cryptocurrency? Because I've heard that term quite a bit.
Yeah, Mike, I'll let you have that question, and then I'll follow right behind you with it.
Yeah, actually, that's the whole basis. Decentralization is the whole basis of cryptocurrency. That was the goal, to be able to not. I'll just say it this way. The monetary system now that uses central banks, where one entity pretty much controls everything, is what Satoshi Nakamoto wanted to go against. That was pretty much the thing that kept power in one place. So decentralization was the whole goal of cryptocurrency. So, and to me, and again, this is a personal opinion, I don't really get centralized crypto exchanges, because it's following that whole strategy of right.
It's just like it's like we're trying to move this way and they're going back this way.
Yeah. Stop driving that Model T, when you have Teslas and Lexus now. So,
but you know what, just from and once again, for me too, I totally agree with you. I got into this game because of the decentralized nature.
Me too.
And that was a revolution for me, having to not have Uncle Sam and Big Brother all up in my stuff.
Yes.
But I completely understand having all of these elements available if we're going to have mass adoption within this particular system. Right. We also want grandma, we want auntie, we want all uncles, we want all parts of the family to join, and parts of the family may have more security with the centralized and feel more secure with the centralized exchange than with the decentralized exchange. Some people want other people to manage their stuff, and some people want to take control of themselves. At least within this type of platform, it's not just like the system we are today in a fiat system where it's just all managed. We have control, and we have the option to be like, are we going to give it away or are we going to manage it ourselves? So I completely agree with that, And so with that in mind, what is a cryptocurrency wallet? Okay, so a cryptocurrency wallet is a secure digital wallet used to store, send, and receive digital currencies. In order to use cryptocurrency, you need to use a cryptocurrency wallet. Unlike a normal wallet, which can hold actual cash, crypto wallets technically don't store your crypto. Your holdings live on the blockchain. That beautiful word you guys have heard all the time, blockchain. All right, a blockchain is a system in which a record of transactions made in cryptocurrency is maintained across several computers that are linked in a peer-to-peer network. We'll talk more about this next time. So a secure wallet can only be accessed using a private key, or a PK, a private key. A private key is a sophisticated form of cryptography that allows a user to access his or her cryptocurrency. Cryptography is a fancy name for a specialized code. So once again, what did I say, guys? A private key is a sophisticated form of cryptography that allows a user to access his or her cryptocurrency. Altogether, the wallet is supposed to provide security that helps to protect a user from theft and unauthorized access to funds. Your private key proves your ownership of your digital money and allows you to make transactions. Warning: if you lose your private keys, you lose access to your money. That's why it's important to keep your private keys very safe and only use a trusted wallet. Guys, what do you think about that? Starting with you, Mike.
So no alligator wallets and things like that. That's not gonna work. That's not gonna work. But yeah, it's. I mean, the platform is digital. The currency is digital. It makes sense, to have digital wallets, obviously, and to be able to have that security. And cryptography is something that's been around for a very long time. And
absolutely,
when properly implemented, it's extremely safe. So you definitely benefit from setting this up correctly. But like Michael said, the key here is don't lose the key. Don't lose the key. Don't lose the key, because that money it'll still be there, but you can't get it.
Oh man, yeah, Mark, what's your thought on what we have gone through so far?
My first thought is it throws me back. I remember talking with somebody who mentioned that they're new in cryptocurrency. They invested in cryptocurrency, they bought cryptocurrency, but they weren't really sure on what they were doing. So they talked to a friend, I think it was a high school friend that they talked to, and they gave their high school friend access to their crypto account. And their high school friend wound up taking their cryptocurrency and locking them out of their account. They've never heard from the guy again. So I definitely believe that security is key.
Absolutely.
And safeguard your cryptocurrency just like you would safeguard any valuables.
Please.
We are begging. Lesson to learn.
Yes.
We are begging you over here at MX3. Keep that to yourself. All right? Don't tell your sister. Don't tell your mama. Don't tell your daddy. Don't tell nobody, okay? Keep that to yourself. Because when that becomes 1 billion, all right, people's eyes is going to turn red. All right. And we hope the best for every one of you. All right. So there are 3 types of wallets, okay? Hardware wallets, online wallets, and paper wallets. We'll dive more into these wallets next time. Now, I know as beginners, a lot of people may have heard about Coinbase, but still might not know what exactly it is. So what is Coinbase? Coinbase Global Inc. Is an American company that operates a cryptocurrency exchange platform. Coinbase is essentially a centralized crypto exchange, but also has hybridized wallet features. Therefore, one can store their crypto on this platform if they want to. The company was founded in 2012 by Brian Armstrong and Fred Ursam, and as of March 2021, was the largest cryptocurrency exchange in the United States by trading volume. Okay, guys. So we're going to take this last couple of minutes of this segment just to watch a quick video. Okay, guys. So now we're going to watch a quick educational tutorial.
Open. If you already have an account, you can go and tap on the sign in button and log into your account. If you are using the application for the first time and you are trying to create an account, tap on Get Started. Now, create your account by entering your first name in the first text field. Type in your last name on the next, and now into the email text field, enter a valid email address that you have access to. On the next field, create a password for your account. Double check your password by tapping on this I icon at the right corner, and once you are done, tap on I certify that I am 18 years of age or older and I agree to the users agreement and privacy policy. Make sure you're 18 years or older in order to create an account, and finally tap on start. The next step is to verify your email. Go and check your inbox by tapping on check my inbox, choose your email, and you'll be able to find an email sent to you from Coinbase. Tap on verify email address and you'll be taken to the next page. You have been signed up for your Coinbase account. That is how you can easily sign up for a Coinbase account. I hope you...
All right, thanks a lot. And we also show appreciation to the channel that we saw that on. Okay, so that was a great way to start and open an account on Coinbase. And now we're going to move to our next segment with Mike. Did you know? Mike, you go ahead and take the wheel, please.
Thank you, Michael. And hello, everybody. So during our last conversation, we talked about the creation of Bitcoin by the mysterious Satoshi Nakamoto, the different forms of digital currency that were created, or that were attempted to be created in the 90s, and what blockchain actually is. Did you know that Bitcoin is not blockchain and blockchain is not Bitcoin? First, let's separate the terms Bitcoin and blockchain to make sure you understand each and how they differ. Blockchain. The first blockchain, sometimes referred to as the blockchain, was the Bitcoin blockchain. Any other blockchain can be referred to as a blockchain. I know, confusing as heck. Let me see if I can put a spin on it for you. Just try to realize you don't need to fully grasp everything in minute detail to use Bitcoin or any other cryptocurrency. I'm assuming you don't fully understand how TCP/IP or SMTP protocols fully function, but you still easily use the internet and email every day. This is a breakdown of what the blockchain is. For those of you who are more technically inclined and love knowing the intricate details of how things work, I'm going to give you the first sentence of a full-page description from the Bitcoin wiki, and then we'll break it down. Wikipedia's definition of blockchain. A blockchain is a transaction database shared by all nodes participating in a system based on the Bitcoin protocol. A full copy of the currency's blockchain contains every transaction ever executed in that currency. With this information, anyone can find out how much value belongs to each address and at any point in history. Each block contains a timestamp and a link to a previous block. A blockchain is typically managed by a peer-to-peer network, collectively adhering to a protocol for validating new blocks. By design, blockchains are inherently resistant to modification of the data. Once recorded, the data in any block cannot be altered retroactively without the alteration of all subsequent blocks and the collusion of the network. Functionally, a blockchain can serve as an open distributed ledger that can record transactions between two parties efficiently and in a verifiably and permanent way. The ledger itself can also be programmed to trigger transactions automatically. Okay, enough geek speak. Let's break this down in much simpler terms. Let's unpack all that. In short, a blockchain is a distributed, meaning many people have a copy, ledger, a copy of all transactions ever sent and received, as well as a list of who has that. In short, everyone has an identical copy of the books. Just like in accounting 101, a ledger keeps the books of transactions coming in and transactions going out since the beginning of the network. It means that everyone keeps the books all at the same time, so everyone on the network has the same info as everyone else. This way, everyone knows which addresses contain how much Bitcoin, which addresses have been sent which addresses have sent other addresses Bitcoin, and everyone balances the books together. Because of this, there is no way to spoof the network. And now you know. Back to you, Michael.
Awesome, great stuff, Mike.
Thank
Now
you.
let's move on to our next segment with Mark. Mark, please go ahead and take the wheel.
Thanks, Michael. That was some good information.
Absolutely.
So I have
Thank you.
no problem. I have a few questions from the crypto community, fresh off the press. So the first question: what is the difference between investing in cryptocurrency and investing in the stock market?
Oh yeah, that's a beautiful question. So the main difference is a stock exchange trades in company stocks or shares, while a cryptocurrency exchange trades in cryptocurrencies, digital assets such as Bitcoin, Ethereum, etc. And asset ownership, maturity of the market, volatility, market reach, and regulations are also things that differ greatly between stock exchanges and crypto exchanges, and we're definitely going to talk more about that later.
Nice. Thanks, Michael. What do you think, Mike?
I think that was a great description because a lot of people, myself included, when I first heard about crypto trading, I wasn't sure how that was going to work. But when you think about it as a whole, assets are assets. It doesn't matter whether it's cryptocurrency, real estate, stocks, different things like that. An asset is an asset and things can be traded. So if you just look at it from a high level, it's pretty simple.
Yeah, it is pretty simple. And especially when, as I mentioned, I'm a new crypto investor, and just getting into the crypto exchange and actually taking a look and see how it works. Yeah, and you can pick up on it fairly quickly.
Yep.
Absolutely.
Great feedback. So next question from the crypto community. Is it possible to invest in cryptocurrency using a self-directed retirement account?
Oh, this
Great
is spicy.
Yeah.
This is very spicy.
Yeah.
So, in short, yes. But hey, you're at Mx3 Crypto Report, and we give you that the good stuff. So,
There you go.
yes, your IRA can invest directly into your cryptocurrency by setting up a trading profile in the name of your IRA. So, if you have a Roth IRA, earnings are not subject to tax when you take distributions in retirement, provided you are 59 and a half and have owned the account for 5 years. With a traditional IRA, earnings are tax deferred. You pay tax when you take distributions in retirement. Now, the IRS has issued a notice numbered 2014-21, stating that Bitcoin or other forms of virtual currency are property. They always love they get their hands on it. Whatever.
Yep.
And if you sell them for a gain, then you have to pay capital gains tax. So don't forget that, guys. So how to own it? First, you'll want to set up a self-directed retirement account. Roll over some of your IRA or 401k funds into this self-directed retirement account. Step 2, set up an IRA slash LLC. Set up an IRA slash LLC. Step 3, set up an LLC bank account. The LLC, LLC business checking account will be linked to your Coinbase account. Link the LLC checking account to your Coinbase account, okay? Step 4, you will use the account to do transactions with Coinbase, okay? They'll be talking to each other. Your account in Coinbase, that's where the transactions will be going through. Or your whatever preferred crypto exchange you guys want to use, and link that to your account to purchase the cryptocurrency. So the wallet is the method used to store the cryptocurrency keys that are used to transfer the cryptocurrency. So the Coinbase wallet is that method, okay, guys? So there are already a certain public traded funds and other avenues, such as Bitcoin Investment Trust, where you can own shares of a fund that in turn owns Bitcoin, such as Bitcoin ETFs, which we talked about earlier, and mutual funds such as Grayscale, which I encourage you guys to do your own research and which we'll talk about next time in another episode. So Bitcoin Trust hold digital currency, allowing investors to trade shares through brokerage or retirement accounts rather than cryptocurrency exchange. So this is just one avenue out of many that, you know, this type of transaction can be done. How does that sound?
Okay. I may have a follow-up question for you, Michael, but
Absolutely.
I'm going to get Mike's take on it first.
I thought that was a very, very, very good explanation because as someone who invests in crypto and also has retirement accounts, when I first found out about this, I jumped all over it because it's the best way to be able to, number one, shield that money, you know, being in a retirement account, and be able to grow your retirement account as fast as we all know crypto is moving. So that is definitely something that people should consider, you know, if they are crypto investors and, again, you know, have retirement accounts. But like Michael said, make sure that you do the right account, and it has to be a self-directed account, and just get some financial advice. But I would definitely advise people to do that if they're so inclined.
Okay. Now, I do have a follow-up question. You mentioned that you have a self-directed account. Mm-hmm. Do you have to have a LLC checking account to purchase the cryptocurrency? Is that a requirement, or is that an option if you have a self-directed account trying to purchase cryptocurrency?
Yeah, so that's a good question. You know, so as I said, just to recap, you know, you roll over some of your IRA or 401k into the, you know, the directed account, self-directed account. And so with that IRA that you have rolled over into that self-directed account, what you want to do is set up an IRA/LLC. So that you want to do this because that is what is going to be used to monitor your funds, if that makes sense. The IRA LLC is what's going to be used for the taxable event purposes. Mm-hmm. So if you did this on any other type of account, I'm not quite sure what would happen, and I'm always interested to learn. But for this type of process, you want to do it on an IRA LLC business checking account, because that's what the government is going to use to monitor your transactions between the cryptocurrency when you are purchasing the cryptocurrency and selling the cryptocurrency for tax purposes. Once again, I'm always willing to learn. If there's more information on this, I stand corrected. And this is just my own educated opinion on this. And this is not financial advice whatsoever. So please, guys, if you have anything in the comments section for me that you want to correct me with, I'm all ears to it. And we appreciate you. Thank you so much. But Mike, what are your thoughts on this? I'm curious.
Well, yeah, actually, if I understand it correctly, when I set mine up, the LLC basically acts as the custodian for the account. So right. It's kind of similar to, like, if you have a retirement account with a company. I can't remember some of these companies now. That you know, like if you have a job and you have a 401k through that job, the custodian of the 401k is the company that manages everything. So if you in your self-directed account, when you set up that LLC now becomes the custodian of basically of those funds.
Okay. That makes sense.
Yeah.
Awesome.
Thank you for both of you guys. That was good information.
No, we appreciate you.
Teamwork.
Teamwork.
Final question. Look like this person is saying that I've been told that I would need to have an account on a crypto exchange in order to buy cryptocurrency. Is that true? If it is true, can you recommend one?
Yeah, that's a good question. So one does not need an account on an exchange to buy or trade crypto. Excuse me, that's just one avenue. One can also go peer-to-peer. You know, the peer-to-peer route, also referred to as person-to-person transaction or P2P transactions. Peer-to-peer transactions are electronic money transfers made from one person to another through an intermediary, typically referred to as a P2P payment application. Okay, P2P payment application. One can also mine cryptocurrency, or one can stake cryptocurrency, provided that it is a feature on the specific crypto on that specific blockchain. You know, so there's other avenues.
Okay. Sounds good.
Absolutely.
Actually, if I could chime in on that, like Michael said, there are different avenues. Exchanges are one. Personally, I've recently come across the Cashapp. You can actually purchase cryptocurrency through the Cashapp. So for those of you who are just you love your iPhones and your Android phones, you can literally just kind of do it that way. It's a lot easier. So there, like Michael said, there's different platforms, there's different avenues. Cashapp is one. I can't personally think of another right now because my brain but
since you bring that up, that reminds me, there's also PayPal. I know you can purchase some crypto. I don't know if it's ETH or Bitcoin, but you can purchase something on PayPal too.
Yes, but with PayPal you can't take it off.
That's the caveat.
That's the caveat.
Okay, cool.
Yeah. So it's like, you pay, I'll be your pal.
All right. Wow. All right. Awesome, guys. Awesome. So that's all the time. Sorry, Mark, were you going to say something?
I'm sorry. I was just going to mention, I've also seen something about cryptocurrency. I'm not sure if it's cryptocurrency or specifically Bitcoin, but I've seen something about a cryptocurrency ATM. You guys heard anything about that?
Yeah.
Oh yeah. Go ahead, Mike.
No. You go ahead. I've heard, but I haven't really looked into much.
Yeah, even last time we went to a taco shop and we were about to go get some tacos, and lo and behold, there was a Bitcoin ATM machine right there. So y'all know I had to go play with it now. And it was so interesting. You just got to make up your little account, and you can put in money into it and get money out from it. You know, would I advise people to do it? I you know, that is up to y'all. If y'all want to use the ATM and stuff like that, please do your own research and stuff like that. But it is pretty cool, you know, that these type of things are popping up all over the place, you know, and it kind of just shows the direction the world is kind of headed in. Yeah. So that's awesome.
Nice. And that was my last question from the crypto community.
Awesome. Because, folks, that's all the time we have for today. And thank you so much for tuning in. You know, we really appreciate you. Please do not forget to subscribe, drop a like, and hit that notification button if you haven't already done so. Also, kindly leave some comments, you know, and questions below so that we can try our best to answer them for you. Once again, thank you so much, and we'll be here same time next week to give you that relevant crypto information when you need it the most. Peace.
Keep your head up, tomorrow can be a better day. If you're looking to get some figures for better pay, invest in yourself, man, that is the only way. Get your clout up, 100K followers. How you do that, man? By not being a follower. How you get there, man? Hustling and bustling. Then you spice it up, put some brain